It's time to talk about something a bit more serious, mortgages. 2012 saw a real war on the mortgage front, but as the housing market keeps heating up, will banks keep fighting for your business? There's no expectation that the Reserve Bank will start hiking interest rates today or even for the rest of the year. So should you take the bait of low fixed rates and lock it in now? Interest.co.nz's Gareth Vaughan is here with us now. Good morning to you, Gareth.
Good morning.
Look, banks were fighting really hard, offering all sorts of incentives and discounts last year. Can we expect them, now the housing market's heating up, to keep doing it?
Yes, I think we can. I think that the thing to keep in mind is that there's been a paradigm shift in the last few years. Obviously, post-2008, global financial crisis world, bank lending growth is in the low single digits, not double digits as it was prior to then. So they're fighting hard for customers. So I think they are going to continue fighting hard for your business.
So you can still haggle?
I think that haggling is certainly that's something I will look to do myself when my mortgage is up for renewal. I think that you know, even the threat to your existing bank that you're going to talk to another bank, you'll be amazed at what they might come back and offer you. But I think it's worth talking to 2 or 3 banks in this day and age.
I want to talk, though, when you do go and haggle, whether you should be sticking with floating or starting to look a little bit longer term. Because, for example, on interest.co.nz it lays out all of the interest rates. Kiwibank, for example, their floating rate, 5.65, their 5-year, 5.99. So there's not a big difference. Yeah,
look, there isn't. And those 5-year rates, I mean, fixing for 5 years for under 6%, historically that's really low. And as you say, the 1 and 2 year fixed rates are below the floating rates. But remember, these are the advertised rates. And that's another thing that's really worth keeping in mind these days, is that if you go and haggle, you should be able to get something below those advertised rates. So I still think it's really worth haggling. And another thing to keep in mind is you don't have to float or fix. You can do a bit of both. You can float some, you can fix some, you can fix, say, even more than one, 2 or 3 chunks for different terms as well. And it's worth crunching the numbers and working out which is the best option for you.
Kiwis used to be huge fans of fixing their mortgage rates, but of course there's been a swing to staying floating. Do you see it going back the other way, perhaps as rates start to rise, or simply because those long-term rates are so good?
Look, it has started moving back the other way since April last year, when we hit the historic high of 63% floating. We're now down to 55% floating. This trend will probably continue, but I don't think that there'll be a huge stampede from people to fix, because it's still a pretty uncertain world out there. Even though the global economy is picking up, we've still got inflation in New Zealand that in the last figures is under 1%. I mean, that's the key thing the Reserve Bank watches. So the official cash rate shouldn't be going up anytime soon. So we should be staying at low rates for a while yet.
Even though that inflation is so low, do you think that Graham Wheeler's going to start to be worried about the housing market and the way that credit is starting to pick up?
Look, he probably should be, certainly here in Auckland. So, I mean, that's, I guess, the caveat is that most economists are saying OCR is not going up at least till end of year or into next year. The one possible reason it might go up before then is probably the housing market. So that, I guess, is a good argument to, fix some and float some to cover your bases.
So don't get too cosy on those floating rates. Thank you very much, Gareth Vaughan from interest.co.nz.